fears of war and a massive 1.9 billion Bitcoin options expiry, the market has been rocked. Yet, is smart money loading up? Are we on the brink of recovery or another crash? Let's dive into what is actually happening. Let's start with the broader picture. Tensions in the Middle East are reaching a boiling point. The situation has intensified dramatically with the assassination of Hamas leader Ismail Haniyeh, an event that Iran has quickly attributed to Israel, sparking fears of a wider regional conflict that could spiral out of control. And when global stability is threatened, investors often get nervous, moving away from riskier assets like cryptocurrencies and towards more safer options. Here's the kicker: with 1.5 billion in long positions have been liquidated within just 2 days. This massive sell-off highlights just how vulnerable crypto is to the global instability, and if tensions escalate further, we could see more dramatic decreases across all asset classes. Now, let's quickly break down some of the news that you've probably been hearing with the Japan yen carry trade and its impact. So imagine that you have access to a very low interest rate in the Japanese yen. You borrow this cheap yen and then you use it to invest in higher yielding currencies like the dollar. This strategy has been popular for years due to Japan's historically low interest rates. However, that has changed. Japan recently decided to raise interest rates, which is like suddenly increasing the cost of those previously cheap loans. This unexpected change has forced many investors to unwind their position, which just means they're selling. And when investors get nervous, the ripple effect can be felt across all markets, including crypto. The sell-off pressure is immense, and we see significant price drops from Bitcoin and Ethereum and in altcoins, but there is another layer to the story that directly impacts the crypto market. Recently, around 1.9 billion worth of Bitcoin options expired. But what does this exactly mean, and why should you care? Think of options as financial contracts that give you the right but not the obligation to buy or sell Bitcoin at a specific price before a certain date. When we say 1.9 billion options are expiring, it means that the deadline for these huge numbers of Bitcoin contracts, traders who hold these options now have to decide whether they're going to execute the contract, which means they're going to buy or sell, or just let it expire. This overall decision-making process can cause significant market movements. For example, after the recent Bitcoin options expired, Bitcoin's price actually dipped instead of rallying, closing around 60,800 on Friday, later dropping to approximately 58,668 at the point of this recording. But it's not all doom and gloom. On the longer front, there are some exciting news. Senator Cynthia Lummis has introduced a bill to make Bitcoin a strategic reserve asset for the US, which could significantly impact the market if it's passed. Despite the recent dip, however, institutional investors have seized the opportunity to buy the dip, where we could see spot Ethereum ETFs saw a net inflow of around 120 million, mainly during the sharp price decrease on Monday and Tuesday. Additionally, there were net inflows for spot Bitcoin ETFs that were initially negative, but they reaccelerated midweek with over 245 million added on Wednesday and Thursday alone. The largest wealth management firms played a pivotal role in this influx. The bank greenlit its 15,000 financial advisors to pitch spot Bitcoin ETFs to high net worth individuals, resulting in a potential $100 million flowing into these funds. By May, Morgan Stanley disclosed holding around 270 million in spot Bitcoin ETFs, showcasing the growing institutional interest in digital assets despite this market turbulence. These moves underline the confidence that institutional players have in the long-term potential of crypto, mainly in Bitcoin and Ethereum currently, and until we expand out further. And to add to the optimism, according to CryptoQuant CEO Ki-Young Ju, on-chain data suggests that Bitcoin bull market is still intact, with over 400,000 Bitcoin moved to long-term holder addresses, showing that smart money is accumulating and not selling currently. This could be a sign that the current downturn is more of just a correction than a sign of a prolonged bear market. So during these volatile times, just remember Michael Saylor's words that he gave recently: those who understand Bitcoin buy it, those who don't criticize it. And it's a reminder of why understanding Bitcoin's true potential often leads to unwavering belief in the future despite short-term fluctuation. But here's a thought: why is Bitcoin seen as such a powerful asset? What about its history gives investors this unwavering belief? If you're curious about the journey that made Bitcoin what it is today, you need to check out my next video on the history of Bitcoin and discover its origins, major milestones, and why it continues to be a revolutionary force. So click it now and don't miss out.